If you're an investor who's fixing and flipping real estate, one of the key components is financing these properties. Now, if you have cash, you're in great shape. But if you don't have cash, there are a number of options for real estate investors. And number one, a lot of investors are going to go to hard money loans. Now, it sounds negative, a hard money loan. Essentially, what it is a higher interest rate, higher points, and many of our investors utilize these hard money loans. The one thing that I advise investors, if you're going to use a hard money loan, they typically require low down payment. Again, a higher interest rate, higher points to be able to do the loan. They will finance the purchase and the renovation of the property. If you have the ability to finance your own rehab, let's say you have a HELOC or you have some cash sitting there, maybe use those funds to rehab the property. Just get the hard money loan on the property itself and then fund your own rehab. That's going to save you a lot of money on these projects if you're going to be using hard money. The other option for financing is commercial loans. And now a commercial loan is a small community bank, and they will make a loan on the property. They typically want 25% down. As time goes on, they may reduce that a little bit down to 20%, but 25% is the requirement. But in most cases, you would have to finance your own renovation. Benefits to commercial loans: lower interest rates, lower points, and it is a relationship type banking. So when you're dealing with the banker, you're dealing with the same person over and over again. You establish a relationship. You may even have deposits at their bank. You may be doing your business banking for those properties or for your LLC through that community bank. So you're establishing a relationship that could go on for years and years. And so I encourage investors to look at that as well. So hard money, commercial financing, paying cash, and then lastly is doing like a HELOC, getting a home equity line of credit on your house or another property, and then using those funds for the purchase and the rehab of the property. So the financing options are out there. Not that one is better than the other. It just depends on everyone's situation where they're at. But if you are going to do hard money loans, which a lot of our investors do, I would recommend getting the hard money loan on the purchase and then you self-funding the renovation on the property. It's going to make that hard money loan a lot better at the end of the day on what your profit looks like comparative to financing the property and financing the renovation on the property. So you have those options that are available. We have great resources for that and referrals. We can send you over to a number of people for financing. So as always, if you have any questions, reach out to me. Thanks.